The Search Podcast USA Edition series is sponsored by PGC. PGC are the longest serving employer of record in North America and can compliantly engage contractors across both the US and Canada on behalf of staffing and recruitment businesses. Our turnkey solution offers a unique access point to the largest staffing market in the world. To find out more, visit us at pgcgroup.com.
Hi everybody, welcome back to another episode of the Search Podcast. I'm Elliott Manning, the Managing Director of Cayman Recruitment UK USA. A different approach this week. I wanted to utilise some good contacts that I've made recently at an event that PGC put together at LinkedIn offices, met some fantastic businesses, and wanted to kind of give a bit more of an educational spin on the podcast with some people that are experts in the market in different ways. But Jack, I'll let you take up an introduction, mate.
Yeah, thank you very much, Elliott, and thanks for having me on. Again, also thank you to PGC for putting on the event. We've brought a lot of good people together, and what's been really evident and most pleasing about the recruitment industry as a whole, and Elliott, I've mentioned this to you last week, is how much everybody wants to help each other out. There's a lot of young businesses that are in the room, and it's really refreshing to see a sector that can be so competitive really coming together to provide support. And again, this is why I appreciate this podcast, is because we're going to chat about a few things that would hopefully help. So
absolutely.
Yeah, my name's Jack. I'm one of the owners and directors of a company called WillU Financial Group. We specialise in consolidating financial services, essentially, and through a number of different channels. In a nutshell, that's who we are.
Perfect, fine. Well, no, look, the US is still it's forever growing in terms of the attraction as a market, and there's a lot more happening over there. It's quieting down a little bit last year, but I feel like everyone was kind of in a position where they're ramping up and ready to go again now. So the amount of companies opening their doors and people that are trying to expand and do different things over there it's just getting more and more popular. What have you seen from your side and the clients that you work with and industries, with the US? What are you seeing at the moment? What have you come across?
Yeah, I think what we've said there is hit the nail on the head. Last year was tough for everybody, and the recruitment sector is included in that, and within the US. I think to get a good understanding of our journey within that and where we fit in and how we've seen this transition over to the US progress is understanding the kind of our positioning within that. But we never set out to start helping recruitment companies and trying to pitch everybody and saying, look, you've got to go over to the US. We've got an international payment solution for you. It was never the goal and never the intention, and we've never sold to anyone within that space. However, what we did find was working with these young, fresh recruitment businesses that are ultimately smashing it from an early stage in the UK, was that they were quite clearly and rightly so identifying that larger margins could be achieved from working in the US, and it's an easier market. So why would you focus all of your hard work and your time and everybody that you're bringing in training to work in the most competitive environment in the world within London? So what we found was that we were working with some of these recruitment companies that were turning over a lot very quickly. And what we were doing was helping them with regards to their insurance. So one of our businesses, WillU INSURE, was ensuring that they had, they're providing a broking service to make sure that they had sufficient cover in place.
Yeah.
What we started to see was these guys growing and the US becoming an option for them. And with us already having the relationship in place, when they were bringing up the conversations about potentially looking into the US, we were then starting to look at essentially giving them access to the international payments platform, or FX, as they might know it. What it allowed them to do is test the waters in the US, which is really important, look professional while they're doing it. So essentially what they were doing was setting up an account, and it would give them the accessibility and the capability to receive US dollars directly into an account in their business name. And it's essentially sent as a local payment. So you go to Austin, you get yourself a client, you're London based, but it's allowing you to be paid by your clients in their local currency, making you look really professional, essentially.
Yeah, absolutely.
Now, won't go into it in too much detail, but what comes with that and with services, and by the way, when I say this isn't just fixed to WillU. There are there are other services that provide a similar thing. Just using our examples here, but what it's then allowing you to do is as you're able to forecast, you're starting to build up those sales. You're able to essentially protect yourself against the market. And what I mean by that is, if you know you've got $100,000 coming over the next couple of months, that $100,000 could mean 70,000 sterling, or it could mean 80,000 sterling.
Yeah.
Not having your eye on the market 24/7 is going to mean that you don't know what that sterling figure actually equates to. So when it comes to commissions, you don't know what it's going to be. It's incredibly hard to reconcile. So we can input solutions that are able to lock that in. So when you do that deal, you know exactly what sterling that's going to come in, and you know that from a reconciliation point of view, you're able to forecast for your accounting purposes as well.
I think it was last year, and I was working with someone I knew at the time and bringing some money back here. At one point, the market got to a place where it was trading at about 1.13. And that dropped from 1.27. So the issue at that point was, from what you thought you were getting to what you could then actually get, it was like it was a major difference, which made us more money.
100%. And the big thing about that you've just mentioned there is that's what you've just mentioned is a 12.5% swing, but the swing was actually north of 20%. And that was great, because companies like yourselves receiving those dollars, without being brutal, have got really lucky and have gone, oh my God, we've just made 20% extra. Well, that swing has just happened the other way around over the last 6 to 9 months. And obviously now trading around that 126, 127 level isn't the worst thing in the world, because it was there not so long ago. But some clients still think they should be trading at 110 and haven't covered themselves for that. So what you're able to do is one of two things, or a number of different things. But what you would have been able to do is when sterling dollar was trading at 110 or 115, whatever level it was on that day, you would be able to lock that in. And use that for a specific amount over a specific period of time. So you say, I know I've got $500,000 coming in over the next few months. I'm going to agree to sell $500,000 at today's rate, but you only fund that trade as and when the money comes in. So you get $50,000 here, you get the sterling equivalent for that trade at 115.
It's so vital to keep an eye on the market, right? And I don't think a lot of business owners are aware of that. And I made that mistake myself, where I didn't actually lock a rate in at the time. And then it's kind of shot back up to 126, 127. And, that's kind of, at a point where I'm used to that now. But ultimately, back then, if I was educated properly and working with someone like yourself that knew what they were doing at the time, they would have told me to do that, and benefited me, a hell of a lot more than it does now.
Yeah, absolutely. And just touch on something you just said there about having to watch the markets. It actually takes that aspect away from it, because if you have your locked-in exchange rate in place, it takes that risk away. You haven't got to worry about where the market's going. You haven't got to panic that the market's moved 5% against you. So that's actually 5% off your bottom line. It's a risk management tool, essentially.
Absolutely. Yeah. So I guess ultimately, like for businesses and those that are listening in on this podcast, if they're setting up a company in the US and they're trading for the first year to 2 years without having a real physical presence over there, necessarily having to set up a physical bank account in a branch in New York, for example, they don't have to worry about paying taxes over there or anything, because ultimately they're invoiced from here to a US denominated account that you will manage, and then they would bring it back into their account in London and pay taxes on it here.
Exactly. The way that the account will work, it will be in the business name of the entity that you open up in. So the two things on that: one, yes, you open it up in your London-based, your UK business name, and you can do business overseas, and you can receive your payments directly into that account. Also, when you do get a presence in the US, you can still utilize these accounts. So you can then, if you wanted to, open up in a US name as well, which is what quite a lot of the recruitment guys do, so that you have a UK and a US. So it essentially forms it's a virtual currency account, essentially. So you can utilize it as a bank account, but it's not a bank account. You don't get a card, but you can send and receive payments.
If they did do it that way, Does that mean that they still would pay sales tax in the UK, either, you know, regardless, because technically that account is still bringing it all back to the UK business, right?
Yeah, so when it comes to tax things, we can't really advise on exactly what the model would be. But typically, what we'll see is that for the UK businesses that are receiving commissions as a UK business, they're paying UK tax. And then when they set up the LLCs or whatever model they want to work with in the US, they then have to report it for US tax as well.
Yeah, I think it's vital that they have both, and even if they've got to a stage where they're physically over there and they're building a presence in the States, people on the ground, etc. I think it's still vital you have both access to you know, a bank account there, that you can utilize a debit card and go and withdraw money in a cash machine, and also utilizing your services because they're going to need to bring funds back regardless at some point. And because, like me, and I'm sorry, I'm just going off on a tangent now. I don't live in the US, so if I wanted to bring any money back as a business owner for whatever reason it may be, personal or for business, I can't declare it there. I have to bring it back here anyway, which then means I need to use you regardless. So there's so many reasons why I think it's vital that business owners have that relationship and that setup in place.
Yeah, and what happens on that front as well is that opening a bank account is a real pain in the arse, like wherever you are in the world. So what we're actually finding is that people and business owners, and we do it ourselves, we want to find the best bank that's the most secure and also is the best across other services, from FX to rewards, whatever it may be. But if you have an account that provides you with these services, if FX is an important part of your business, the last thing you want to do is go through rigmarole of opening up with a JP Morgan, for example, in the US. Takes you so much time, and essentially you're then going to either get stung on exchange rates, not have the support, and have to find something for that anyway. So what it actually does is opens up a little bit of another opportunity to go with a more challenger bank. So a lot of companies are using Tides and so on, which are easier to open up with, or the Chase accounts, easier to open up with because you're literally using it to hold money, and you're using it if you need a debit card and so on. But then actually the processing of invoices and funds in and out is done through their account with us.
Yeah, absolutely. I totally agree. And, you know, I've told every single person that I've ever spoken to get it set up straight away. People feel like doing these international banking, you know, whether it's in Dubai or whether it's in Australia or US, it's got a complication to it and it's difficult and they don't know what to do, but it's very simple. And it really is. And I feel like now that more and more people are educated on the fact that it is straightforward, and you don't have to do anything in the US physically to be able to operate and bring in any revenue from there. You know, these services are key to that infrastructure, which is important. And can you explain, like, if let's just say someone is working with PGC and they've got someone employed, an American citizen over there that is being payrolled by PDC through their setup, etc. The UK company would then be invoiced from them to cover the payroll and cover the fees, etc. And then realistically, and I'm probably explaining what you would do anyway, but like the money that they would generate back here in the account that you've given them, they would just pay the invoice with that. So in essence, it still makes no sense. They can still have staff over there and bring the money back through to your account and be invoiced through PGC, and ultimately it all kind of works together.
Absolutely. So that's a really good point you've made there, actually. So it is an account that's specifically for currency transactions. So we make a margin on the conversions and so on. However, we are very aware that there's a huge benefit for clients through making quick payments in same currency as well. So what we don't want to do is turn clients away and say, if you have dollars, you need to send dollars through your bank account, not through us. So if you're receiving, there was a client that we were talking about earlier who receives dollars in weekly. Yes, they convert 95% of that back into sterling, but there do come times, or there are times where they need to send dollars out for an invoice that they've received in dollars, which they can do as well. So it's essentially used as a payments account, not just currency conversions.
Yeah, it's easy. I mean, I'm the struggle that I had setting up a physical bank account, which I ended up having to do. I had to go to the US twice to sign documents and paperwork. Then there was a mistake made, and I had to go and pick up the document from the office that we had there, physically go and get it to then be able to sign it again, because they won't take, it has to be a wet signature. It was quite aggravating at the time. But I mean, look, it is what it is, and I chose to do that because I got to experience what I do, so I can educate others on it. Can we just go back on the last part on this? I wanted to talk a bit more about from an insurance perspective. Where do you kind of see the the value add from your side on insurances when it comes to maybe the US?
Yeah, I think the insurance just across the board is an important one. And again, as kind of young business owners, as we've grown our own business, the last thing you want to do is sit there, panic about your insurance, worry about the cost of it, and whether you're actually sufficiently covered. So what we do is we work with, in particular, recruitment companies from an early stage to make sure they have sufficient cover in place, first of all, and it's in line with forecasts. That's really important to understand. There are certain policies from certain recruitment specialist underwriters that are incredible and they're really helpful for startups. But it's so important that anyone that owns a recruitment company understands what they're covered for. So if you're only covered up to £250,000 of a turnover and you're over the moon because you're about to do £3 million, you need for that. And that's where we come in and make sure that we're doing our best for you. Now, when we're moving over to the US, again, we're working on a few cases at the moment, making sure there's worldwide cover. So when you are doing business in the US, everybody knows, watching TV, watching films, that the US love a lawsuit. So you need to make sure you're protected. You have to also make sure you have sufficient cover in place. So for when you're starting that journey, starting to go and do business in the US, we can source worldwide cover for you, which includes the US and any legals that come into that. Obviously, there was a conversation that we had as well earlier about once you've got the US entity in place on US terms, that is a different cover. But as a UK entity, going over to the US and starting to do business and working with US clients, we are able to source that cover for you and on a worldwide policy.
Am I right in saying, and I'm not an insurance expert, and I'm just kind of speaking from experience, and I think I mentioned this to you last time, the only way, if you're a UK company and you operate in the US, the underwriters will naturally ask how much turnover do you expect to make from an international standpoint against your overall turnover. What portion of it is going to be US? Once they've kind of so you've got to give the specifics, and you can't make it up because they'll know. But ultimately, from an insurance point of view, if you're sending a client in the US your terms of business from the UK and getting them signed, you're covered regardless on a professional indemnity aspect if anything was to happen. However, if you send over terms that are US based and to a US company, then your UK term insurance isn't going to cover that.
Yeah, exactly right. And the important thing that was mentioned there is that the UK terms. If you're the UK business with UK terms you're sending over, you are acting as a UK business using that. So it's important that when you make that transition and you have feet on the ground in the States and you start using US law, that you have sufficient cover for that. Which again we would speak about and make sure that you have in place. But it's a really important distinction to make there between the two.
Look, it's very expensive over there for insurances in general if you're a US company, but ultimately a lot of firms have covered themselves from a UK standpoint anyway. I mean, look, the likelihood of professional indemnity being taken into action is very rare, but it's one of them that you just need to have as a business owner just to cover yourself regardless of anything. And there's things like, if you're doing financial recruitment and you're placing financial directors and CFOs and they commit fraud, there's a suit there straight away, and ultimately you provided that candidate and then you get done from a liability perspective. So there's lots of different avenues. It was obviously is dependent on the market and stuff like that. But no, it's good and really useful to know, just to kind of share that insight with those listening in. Look, mate, from a payments perspective, insurance perspective, there's a lot of really valuable insights that we've shared to those listening in. If anyone's got any questions, feel free to reach out to Jack directly and ask him. If anyone's looking to do any international payments, I'm sure there's a lot of people that listen to this and I've spoken to you recently, a few of you. Reach out to Jack and get yourselves an account set up, look into your insurances, and just Jack will direct you with whatever you need moving forward. But look, I really appreciate your time. thank you for joining me on the podcast, mate. And I'm sure me and you will need to have a chat about a few things afterwards as well.
Yeah, definitely. No, thank you very much for having me on, mate. Really appreciate it.
Pleasure.